All right, welcome back, everybody. The Presidio Perspective. Dustin TenBroeck here. With me today is Blake Feindel, wealth manager, fiduciary extraordinaire, member of our team. It's good to have you today.
Yeah, thanks.
Yeah,
Looking
man.
forward to it.
Yeah, we have these conversations on a daily basis. It's good to get you out in front of the camera, and I know you're having those conversations on a daily basis with our clients. But yeah, there's a lot to talk about right now. But man. So let me get this right. You've been in financial services since when?
2005.
Yeah.
It seems like a long time.
Flies by.
Yeah.
Man, almost going on 18 years, 17, 18, almost 2 years, almost 20 years, man. Getting old.
Thanks for reminding me, Dustin.
Yeah.
Appreciate
Well,
that.
you know, we've been in the business the same amount of time. I look it though. You somehow got to keep all that stuff on top and, whatever. That's good.
You're too kind.
Oh, man. So you've seen a lot of that last 18 years.
We've seen a lot in the last 2 years, you know?
Yeah. No, for sure. For sure. Looking back 2 years ago, right, those stay-at-home orders went in COVID.
Yeah, some of us adhered to them and others didn't, but yeah. It's been crazy times.
Yeah. And so we had a lot of fallout, man. Just going back to that time, I mean, I think it's important to kind of put these things in perspective. You and I were in the business in 2008, and just thinking of how crazy that was. Yeah. And, we thought that we were going to go to an ATM machine, which we used ATM machines back then, by the way, kids. We still had to have cash to get stuff done. We wrote checks, all that kind of crazy stuff. But we thought we were going to go to the ATM machine, put it in our card, and nothing was going to happen. It's pretty close to that happening, right?
Pretty scary.
It was scary, man. People lost a lot of money, livelihoods, jobs, houses just underwater, foreclosures. It was pretty brutal. But going back then, and we've seen those traumatic events, and we've seen wars and all that kind of stuff. But yeah, in the last 2 years, there's been a heck of a lot. And just looking back 2 years ago, and that this new disease from China is coming over, the coronavirus, and what is it, and everyone's going to die. I mean, it looked like the world was ending.
Yeah. I think you brought up a good point. I mean, going through the 2008, crash,
yeah.
Made this a lot more tolerable and easier to
those that remember that.
Yeah,
right?
those remember. Yeah, exactly.
Yeah, it was still enough in people's memory. I was worried about it, not having a market correction for a group of people or a crash that never knew what it is. And that's when they can get really exacerbated when no one's seen the market go down before. Mm-hmm. So you asked what lessons, you kind of get from those periods of times. That's a pretty good lesson for people. Mm-hmm. I mean, we were fielding calls March and April, and the stock market's just in free fall, goes down 35%.
Talking people off the ledge.
Yeah. I mean, we couldn't get to a ledge because we were cooped up in our homes. We couldn't leave. No one was driving the car. There's no one on the freeway. It looked like something out of a zombie movie. I mean, the parking lots are empty. The freeway is empty. I mean, we're locked up.
Can't get any toilet paper?
Oh, my gosh, the toilet paper. Yes. Oh, man, I'm so glad you brought that up.
Yeah.
I mean, just to think of the crazy stuff that we human beings do, right, in a panic. And investors right now, we're seeing a lot of this happen right now today with surging prices and commodities and energy and what do we want to do? We want to hoard it, right? People are filling up bags of gasoline and things like that. Have you seen those videos out there? Oh my gosh, it's just nuts, right? What we do. It's toilet paper hoarding. That was the thing.
Apparently.
Yeah, man. So, yeah, we did some crazy stuff. I mean, I remember talking clients off the ledge, of course. I mean, badge of honor, not one of our clients sold out during that market crash in 2020. And that's, for me and our organization and our clients, what a win that is, right?
I think it speaks to the process, of putting together a plan and having that confidence to be able to ride the ups and the downs, because we know that these are going to happen.
It's our number one job, right? Preparing people so they don't buy high and sell low. I mean, that's the number one job. Getting people to not sell at the wrong time and be confident in that process. And you gotta do that with that plan and creating those time horizons. And we put in so much work to get that plan dialed, right, for that individual client so that they have confidence and their long-term goals, right?
Yep.
So people not selling during the downturn was great. the harder thing for people to wrap their heads around, because we prepared them for the market crash. But like, early summer of 2020, the funniest thing happened. So the market started going up.
Yeah.
And that seemed to not make sense. When we have coronavirus hitting and the whole world economy shut down, we're seeing death tolls and structure fires and riots, political divide, social injustice. Yeah, makes sense that the market's going down. But when it starts going up, people are like, it's lost its mind.
Yeah, and it's just looking back, and these storms pass with time, and we have these ups and these downs, and just got to remember that for long-term investors, which, we all, inevitably are, some portion of our money is set aside for the long term, right? And you've got to, you got to let the storm pass.
Yeah.
And look at opportunities to actually add to those core positions and build wealth.
Yeah, it's like us Southern Californians, when we have a cold, rainy day in February, we're shocked. It's like, yeah, winter comes. Like, it's not a long winter, but yeah, you're gonna have a couple cold days. Yeah. The same thing as investing. They're not all green. It's not all to the moon. Mm-hmm. But let's switch gears a little bit, because I want to talk about a little segment called "Don't Be Distracted by Shiny Objects." Right. So there's a lot of work in that plan, getting people to not sell low. Right. I think it's even harder for clients and investors in general to sell high, right? And to, take the thing that's worked out the most in your portfolio and sell it and get out. Yeah. And what are you going to buy?
One of the most difficult conversations.
Yeah.
Getting them to sell their golden goose.
Yeah. And then what do you ask them to buy? Thing that's doing the worst a lot of times, right? Mm-hmm. And like, oh, how does that make sense?
We have a lot of, and this is natural human instinct, right? Is look at the last year's best performers and say, hey, look, this asset class or this stock is junk and hasn't performed. I want to own that.
Out. Yeah,
I want to own that.
Go more into the thing that worked out.
So it's just kind of naturally the progression of like what people want to do, and it's coaching them otherwise is
and that's the plan, right? I mean, it comes back to doing the math. We say it all the time, it's just math. You got to come to the plan, because left to our own devices, we're gonna make some pretty bad decisions. So I know that a lot of the people I encountered, that had concentrated, because the thing that happened in COVID too is it kind of fast forwarded a lot of these technologies, right? The stay-at-home stocks, and that there's this new world order, right? And so it's just our view, our lens into the future is so short, right? And the news is only going to report on like 5 minutes in front of your face, right? We're not talking about things that are happening 6 to 9 months from now, which is what the stock market inevitably is going to do, right? And if we can be a little bit better investors and look at years into the future, how much better would we be, right? And that's the math part of the financial plan. But, the world's ending. It's all over. Everything's done, let's get out. And then, oh my gosh, here it is, this new world order, this is how it's going to be forever, and get rid of all of these old companies. I want to shed. No one's ever going to fly a plane again. No one's ever going to drive a car again, right? No one's ever going to go to the office again, and what are we going to do? Here's the new way. And so you have all of these stay-at-home stocks just taking off, and it's like if you're not in there, you feel that FOMO, right? You're like, I'm missing out. I need to get in. So if you're in, like selling it after you had this huge, massive gain, let's say you doubled your value of that investment you were in, you doubled it in a short period of time, which happened across the board on a lot of those stay-at-home stocks. Like, what else were you waiting for? That's a pretty big win, You
got to know these things all have to come back down to earth at some point, that things come back into balance, and that comes speaks to the point about these corrections being healthy.
All right. Well, I got a little list for you.
Okay.
Because these were just some names that I was seeing people telling me that I know you had these conversations too, and this is where I want my portfolio. This is what I want to be positioned in.
Okay.
Teladoc, Moderna, Peloton, Zoom, DocuSign, Netflix, Meta, Amazon, Tesla, ARC, Cathie Wood, right? These are all the stories of the day. experiencing fantastic, phenomenal growth. And I looked back at these today just to say, okay, let's see where they are today relative to their all-time high.
How many of them were below their pre-COVID levels?
A good amount, actually, which was shocking.
Yeah.
Pre-COVID. It's like rode it all the way to the moon and fell to the basement. Not even back to Earth, like went below ground, which is crazy. That's a good point that you bring that up. Yeah. Teledoc, right? We're all going to use this new video technology. No one's going to go to the hospital. And that's the thing, too, is like some of these things aren't wrong. But what investors learned is that valuation matters. What you're paying for something actually matters. It doesn't mean it's limitless of what you're willing to. Like, I got a pretty good cup of coffee in here, but I'm not going to pay $60 for this cup of coffee.
Yeah.
Like, it's worth, I don't know, whatever the pod is that we put in the Keurig to get it, you know. But if they're like, hey, that pod is $60, and say no. But that's like the levels that these things are trading at.
Yeah, and I think there's a pretty good investor that said that price is just what you pay for it.
Yeah.
Value is what you get from.
Value is what you get. Yep.
Yeah.
So let me just go through a couple of these. Teledoc traded over 300. Today it's at 60. It's less than 20% of its all-time high. It's down over 80%. Moderna, we all know Moderna, right? Stock is, it's a good company. They're revolutionary. What they're doing, they have a lot of potential, but that means that valuation still matters. Traded up almost at 500 at one point, right? And of course, there's going to be huge news, vaccine, rollout, global. They're at 140 today, 28% of their high. Peloton. Do you have a Peloton in your garage?
I do not.
Oh, I got one in mine.
I play soccer.
Yeah. It's been getting some cobwebs recently, but we have the Peloton. 171, all-time high. Down at 22. It's one of those pre-COVID lows, right? It's at 13% of what somebody... And by the way, when I'm saying these highs, that was the price that it traded at that day, meaning somebody bought it that day for this price.
Yeah.
Right? And a whole lot of people did. So this isn't just a fake thing. People bought Peloton at 171, and I don't know where they held, but it doesn't really matter because it never got that high again.
If they haven't yet, they should probably be tax loss harvesting.
Yeah, we'll get to some opportunities, tax loss harvesting. Zoom Technology, almost 600, down at 102, 17%, 83% fall. DocuSign, painful for a lot, right? Of course, we use DocuSign, but what you pay for it matters. Over 300, now less than 100, 30% of what it was. Netflix, not only the little ones, right? Let's talk about the big guys. Netflix, traded up to 700, now at 360. It's about half.
Yeah.
Netflix. That does not collect dust in my house.
Do you use it?
Yeah, we do.
Oh, yeah,
Plenty
me too.
of Netflix.
Weird.
But that doesn't mean we'll pay whatever. Meta, Facebook. We all know that story. Poor Zuckerberg fell off the top 10 billionaires list.
Poor guy.
I know, poor guy. So it's trading at half of what it was at his all-time high. Even Amazon's down, right? 22%, hasn't really moved. Got up to almost 3,800. It's below 3,000. Tesla, right? Another big name. It's had some phenomenal long-term success. Down 35% from its all-time high, right? And then Cathie Wood, ARK. Oof. Those ARK funds, man, which basically owned all those stocks I just mentioned and others that were worse, right? Traded up at 159. It now trades below 60, a 64% decline. By the way, the S&P's all-time high, right, was about 48. It's now trading at 42. It's down 12%.
Mm-hmm. So
the stock market is down 12.
Correction.
But this is like the importance of having that diversification, having that plan and that asset allocation, not chasing those shiny objects.
Yeah.
I mean, this is real punishment that a lot of people have had, and their lives are altered and changed forever.
So that's a good point. But what do you see as the shiny objects today? Like, what are you hearing? You know, 'cause I think we both know, but like what?
Yeah, let's bring it back full circle, right? So what caused all of that growth, that phenomenal growth? The stock market's going up when the world's in chaos. All of these stocks, the new day is raining in. Well, also what's happening is just a fire hose of cash is unleashed, right, from our federal government.
Yep.
Checks in the mail, okay? I talked to a CPA his clients, he's like, I can't, I want to fire these clients. I just can't agree with them. Like, what are they doing? They're like, they're not paying their rent because they don't have to. So the landlord's getting stiffed on rent. They're getting government checks and they're using it to buy meme stocks and Bitcoin. You're like, oh yeah, that's a recipe for long-term success. Like, of course, these how these prices get inflated and crazy. So anyway, you asked, what about today? So
what are the shiny objects today?
So I'm getting there. Sorry. So, they are the result.
Enough about people not paying their bills. Shiny objects.
Well, those bills are getting higher, right? So it's a good segue. The bills are higher. We have inflation because of all that stimulus we did. Today we got a new reading. Did you see it? February inflation?
7.9%.
7.9%. Year over year, 8%. Let's go ahead and say 8, rounded to 8. 8%. Yeah. It's the highest we've had since January of 1981. Yeah. I mean, it's insane.
Are you feeling it?
Yeah, I told you. I went to the pump. I paid over $6.20 a gallon. I couldn't even look at it. I was like, I can't even.
I have a diesel thinking that, maybe I'll.
Yeah.
It's closer to 7. So
yeah,
I feel you.
But these are short-term things, right? And so just like this new day of technology stocks and the meme stocks and this is it. Doesn't matter what the prices are. They're going to go up forever. Same thing is happening over here, right? Now we're saying people, I want to get out of my energy, or I want to get out of my growth and my technology. I want to jump into energy and commodities. Mm-hmm. Why? Because oil's over $100 a barrel. And so now it's the same thing that people did, jumping in, right, after the phenomenal run up and saying, oh, here it is. Here's the slope. It's just going to go up forever. I want to buy. Well, inevitably, it rolls over. And so now we're seeing the same thing, right, with these shiny objects with energy.
What was the lowest price you could pay for a barrel of oil?
Oh, my gosh. Great point, man. So oil today is trading at about 105 to 110. I think it got up to 127 recently. In 2008, it peaked at 140, okay? And then it has gone in a decline since then, went through a crash in 14, right? And in 2020, a barrel of oil was negative $40.
Meaning you could get paid to take it?
Yeah,
they would.
Yeah, like if I was producing oil and distributing oil, I'd have to pay you to take my oil, right? And that's the space that we're investing in, right? And so the same thing can be said when you look at companies that don't make money that you're investing in, right? Or meme stocks that are destined to fail. If you look at what you're actually investing in, be prepared for that wild ride that you're going to be down. I want to invest for growth. Okay, I want a supersize, aggressive growth portfolio. I want to invest in technology investments that are going to be there for the long run. Cool, you down to, stomach an 80% loss in your portfolio? But look at the price of oil. We talk about what's changed in the last 2 years. We've gone from negative 40 to 120 and a bunch of stuff in between. I mean, no one was supposed to drive a car a couple years ago, and now obviously we have some short-term phenomenon that is creating, a surge in the price of oil, right? Coupled with inflation. But, so investors coming back to that plan, like you say, has to be so important to just stay on the course in the long run, right? That's not to say that you don't have assets allocated into these different sectors where you can benefit, right? You should. You should have a piece of your portfolio in these different areas, right? But that's where rebalancing kind of takes into place.
Well, outside of rebalancing, I think it's important to sit down, and every client's got a different financial fingerprint, right? And you look at your fingerprint, everybody is so unique. Yeah. Right? But it's important to take a step back and look at the big picture, right? This is just noise.
Yeah.
This is a storm that will pass.
Yeah.
Right, just like all the other storms.
Well, the wild thing with the stock market is it's gonna change before you see the change, too, right? It's discounting.
It happens quick. It's like a diet, right? Like you can add or you can lose or you can add
lose weight
much quicker.
Yeah.
Or I'm sorry, lose weight slower.
Yeah.
And add weight much quicker.
Yeah.
Right. So it's like same with investing returns and profits.
Yeah.
But
so essentially that market's going to be looking at things like what the Fed's going to do with interest rates to tamper down inflation.
It's already priced in.
Yeah. But, I mean, there's also some unknowns that become knowns.
For sure.
Right? And so as that starts to happen, more and more gets priced in. As the conflict in Ukraine with Russia is coming down to some kind of resolution, whatever it is, it might not be the resolution that everyone's hoping for, but the market just likes resolution.
Yeah.
The market just likes whether it's good or bad, right? And so we saw that when we say, okay, we're going to raise rates or we're going to stop this. And it's like, oh, okay, well, that's what we were worried about. And the market's like, okay,
still going to happen.
It's going to go up from there because they're not worried about it anymore. Yeah. And so the market's going to be discounting this stuff in the future. So, yeah, I think it's important to kind of look back and see some of those shiny objects that we've been distracted by in the past and to not get suckered in to do it again, right? And just repeat until broke.
Big picture.
Yeah.
Take a look at the plan. We plan for these things.
So right? you mentioned tax loss harvesting. So I got some of these names. I mean, what does that mean? Like, what am I trying to do in these challenging markets?
Essentially looking at.
So what type of accounts am I looking at?
Taxable
accounts.
Right. So you're
not my IRAs, not my Roth IRAs, 401ks, right?
Yeah, I'm assuming that everybody knows that you cannot take a loss on your retirement accounts.
Right.
But just looking at opportunities to sell some of the positions that you have that maybe you bought them recently that are sitting on 15, 20, 30% losses.
Mm-hmm. So you're selling low.
But you're reinvesting, being cognizant and mindful of wash sale rules.
Yeah.
Then take that loss, realize it, and that tax savings can add real value over time.
So, so a couple of things. When I recognize I realize a loss, right, that gets reported on the Schedule D of my tax return.
Yep.
And I can use that to what? What do I do with
that? To offset future gains.
Okay.
In perpetuity.
What if I have no gains?
Well, you will have gains eventually if you're working
like
with a good.
Yes.
I mean,
okay.
At some point, if you're an investor, you will have gains.
Yeah.
Right. So
you carry it forward indefinitely.
You carry it forward indefinitely.
Okay.
Until you pass.
And what about? Don't you get to offset some of your ordinary income each year?
You do. $3,000 a year.
$3,000 a year.
Yeah.
So whatever your tax rate is for us Californians, that's real money.
It's real money
that you're getting back. And so in tax plan, you're going to get when you harvest a loss in a taxable account, right? So that's good too. If we're looking at where to reposition, if we can reposition assets, in a taxable account that are low, and maybe even buy them somewhere else, right, in our account or a similar type investment, right, kind of keep us in the market.
Yeah, it can't be substantially identical investment,
right.
But outside of that.
But this is where, index investing and mutual funds that have exposure to an asset class that's down, I can say, okay, I want to go from this kind of large cap growth strategy to this large cap growth strategy. As long as they're not identical, there's some differences. You can pretty much, capture 90% correlation to the upside. And
unfortunately, the IRS has a very vague definition of substantially identical. But yeah.
Fortunately, unfortunately.
Unfortunately.
All right, fortunately or unfortunately, right? You could take their liberties and see what the audit comes back with, I guess. But yeah, okay. No tax advice here. We are not CPAs. Consult your CPA before making any tax decisions. Absolutely.
Yeah. But it's something that every advisor should be doing for their client.
Looking at those opportunities and seeing what exists. Yeah. What about the retirement accounts? What do we look for there? We have assets that are depressed. Say I'm, look, I know a lot of people who are bullish on some of those names that I mentioned. They say, yeah, I know they're down, 20, 30, 40, 50%. I'm in this for the long run. I don't want to sell it, right? I don't want to miss out, right? Which, if you're out of a position for 30 days, a lot could happen, right? You could miss out.
So we're not talking about being out of the position.
Okay.
We're talking about replacing it with a different
But what if
position.
I don't want to replace it, right? What if I have that in my IRA and I want to keep it?
Well, then you get into, are you just doing it to avoid the?
No, like I want to keep this position.
Your whole cash.
And it's down, right? What's a good example on like what you do with a Roth conversion if you have some of these? Have you experienced this? Have you done this?
No, absolutely.
Yeah.
So, I've got a client, high conviction on EV,
electric vehicle,
long-term plays, sitting on a handful of positions that are down pretty big, right? But he believes that over the long term that those will recover and rebound.
Yeah.
So we take a look at that. Now's a great time to convert that from your taxable IRA into a Roth IRA.
Yeah.
And a good way of explaining it to most people is we like to pay the tax on the seed and not on the harvest.
Yeah.
Right?
Right.
And it's like,
So you pay for what it's worth today, and then you get to sell it and tax-free for whatever it could be worth in the future, assuming it goes up over time.
Exactly. So this creates a ton of opportunity for us to look at, different options to start to shift some money.
And I get your point on the fingerprint, right? Because we are all unique, and every client's fact pattern is a little bit different. I appreciate the length that you go to kind of understand what's different about their plan and what strategies would apply to them, right? Because this wouldn't be everybody, right? If you look at that person and they're retiring a year from now and they're in the highest income bracket they've ever been in, you're probably like, probably not the time to convert too, right? There's a lot of factors that go into that. But
absolutely.
Yeah, so planning during these times when things are down that we're bullish on or conviction for the long run, it's time to look at some of those tax plans. So you mentioned Roth IRA conversion, tax loss harvesting. Those could be huge. Yeah.
And adding to the portfolio.
Adding to names that you are convicted about or that you're under allocated to, right? So a lot of times you can look at things that were too pricey. So not everybody jumps in when the price is high, right? There's some people that do that, right? Fear and greed. A lot of people avoided it. They said, hey, it's too pricey. I don't want to invest now. A lot of people do that, right? Everyone wants to buy the dip until the dip happens. Right? And I'm scared that the market's going to go down. It's too high right now. And then you're given an opportunity right now and they go, oh no, there's a war going on. I think it's going to go worse. It's like, what are you waiting for?
Yeah.
I mean, this is it. Yeah. I mean, it's shocking to see the people who don't take those opportunities that in my career and your career, we've seen them that they didn't invest in 08 and 09. They didn't invest in 2020 and they're not investing now. And it's like, what's going to get you in? It's low prices, high prices, turn off the news and make some long-term plans.
If I think about the psychology of that, and this impacts all of us, you, myself, it's like, hey, have we hit the bottom, right? Because we're all thinking, okay, is it going to go lower? But the reality is like, you don't know. Nobody knows. Nobody has a crystal ball. Those are on back order on Amazon as well.
Yeah, Warren Buffett will probably make a bet with you if you want of the value of the S&P 500 10 years from now.
But it's like if you're long term, put your money to work.
I mean, just whether it's higher or lower. Yeah.
And
your time horizon is going to help you make those decisions.
Absolutely.
Don't feel like you need all your money today or tomorrow, right? No. Then we can go. Yeah, man. Well, there's always going to be something. I wonder what we're going to be talking about 2 weeks from now. The news keeps evolving. But, looking back to where we've been over the last 2 years, and it's been nice actually talking with you and thinking also about the last 18 years and all that we've seen to really kind of help put things in perspective. A little plug, Presidio Perspective there. So, anyway, man, it's great having you. Awesome. All right, guys, absolutely. Thanks for joining us. Look forward to having you with us next time on the Presidio Perspective. Enjoy the weekend. We're out. Care.